Hey guys, it's Joel with Interactive Trader, and today was an exciting day, so we want to share some of our thoughts on it. First of all, the big numbers were all really negative numbers. And most of that is probably attributable to fears over the coronavirus and how far it might spread and the impact that that may have on economies if people are forced to curtail their travel. It's a big deal, guys. It's not a small thing, and for a correlation or a corollary type event, I should say, go back to 2014 and looked at what happened with Ebola and the impact that it had on the stock markets. Had that real sharp V-shaped pullback and recovery. Not sure what's going to happen with this one, and I don't think anybody is. But more important than that, guys, even beyond that, this is a huge economic week. I wrote down all this stuff so I don't forget any of the major events that are happening this week. Tomorrow, Tuesday, we've got durable goods orders coming out. We've got consumer confidence coming out. Wednesday, we've got the FOMC making their interest rate announcement. On Thursday, we've got GDP and jobless claims. And to top it all off, we've got over a quarter of S&P 500 stocks all reporting earnings this week. This is a major week for potential moves. Now, when that's happening, what you need to do, guys, is just fall back on your rules that you have. Trust your system. Trust your rules. You've been working hard to develop these rules. Don't start breaking them now. That's the tendency, is to panic at times like these, and we want to make sure that you don't panic. There's a lot going on in the market this week. Don't let it overwhelm you. And if you are feeling a little overwhelmed, hey, you know what? It's okay to just not place a new trade for a few days. There's nothing wrong with that. In fact, that's a huge advantage that retail traders have that a lot of times we forget because we feel like we have to be trading, trying to push something through. But there is a lot going on this week in the markets, guys. From an option pricing standpoint, and to me this is good news, the volatility index for the S&P 500, the VIX, closed over 18 today, which means options are expensive. They're the highest price that they have been since last October. So those of you guys who are out there liking to trade credit spreads and things like that, you should be rejoicing, because this means you're making more money when you put your trade in. It also means you can go further away from the stock and still get a higher premium. So you're having a higher probability and a higher premium when volatility gets inflated like this. Most importantly, of course, guys, stay safe out there, have fun, and make some money.